everyone, and welcome to our special segment on old tax regime versus new tax regime. I know you must be a little disappointed that there were no reforms or major amendments made in this budget 2024. But did you notice that it was not a union budget but an interim budget? Why was it called interim? Let us tell you. With the general elections around April and May 24, the new government which will be formed is expected to present their full-fledged union budget in July 24. Until then, our Finance Minister Nirmala Sitharaman has proposed this interim budget which will be followed till the new government resumes office. Now let's shift our focus to the agenda of this video, which is old tax regime versus new tax regime. If nothing changes in the new budget which will be proposed in July by the new government, this new tax regime and old tax regime will still be applicable for the new financial year. So I think you should know the differences and take a right call using the tax calculator. So let's see what are the key differences in both the regimes. Starting with the implementation date, the new regime has been in place since the inception of income tax laws, while the new regime was introduced from April 1, 2020. Moving on to the tax calculation method, the old regime involves a complex calculation with various exemptions, providing more options for taxpayers to reduce their taxable income and tax liability. On the contrary, the new regime adopts a simplified calculation with reduced exemptions, streamlining the process. Then, the new regime is the default option as announced in Budget 2023. However, the taxpayers have the flexibility to choose old regime if required. Now, seeing the tax slabs, we can see the adjustments in both the regimes. For example, in the old regime, the nil tax slab is up to Rs 2.5 lakhs, while in the new regime, it's up to Rs 3 lakh, which was recently announced in Budget 2023. The slabs further vary for different income ranges. Now we see exemptions and deductions. The old regime offers approximately 70 exemptions, including HRA, ATC, ATD, providing more avenues for tax saving. In contrary, the new regime comes with limited exemptions, excluding the popular ones like LTA, HRA, ATC, ATD. Now considering the standard deductions, both regimes provide a standard deduction of up to Rs 50,000 for the salaried individuals. Standard deduction was allowed as a deduction under new regime only after Budget 2023. Now let's take some examples to understand or compare the tax liability between both the regimes. Suppose an individual who is earning Rs 8 lakh as salary and has a deduction of just Rs 1.5 lakhs under ATC. Here's how the comparison table looks like. Now you see, after allowing the deduction under ATC, the taxable income becomes 6 lakhs and under the new regime, it is still at 7.5 lakhs, which brings down the tax liability to Rs 33,800 under old regime and Rs 31,200 under new regime, inclusive of cess. Similarly, suppose an individual who is earning Rs 12 lakh per annum in salary and has following deductions. ATC 1.5 lakh rupees, ATCCD 1B which is NPS Rs 50,000 and home loan interest Rs 2 lakhs. Now look at the table and see the difference between the calculation. After allowing all the deductions given under old regime, the taxable income comes down to 7.5 lakhs from 12 lakhs. And under the new regime, since no deductions or exemptions are allowed, the taxable income is at 11.5 lakh rupees, making the tax liability to Rs 65,000 under old regime and Rs 85,800 under new regime. And now one last example. Suppose the same individual who is earning Rs 12 lakh per annum as salary and has lesser deductions like ATC 1.5 lakh and ATCCD 1B Rs 50,000. Let's see how will be the calculation here. The taxable income comes down to 9.5 lakhs under old regime and 11.5 lakhs under new regime. making the tax liability to rupees 1,06,600 under old regime and 85,800 under new regime. So based on these calculations, we have also come to some assumption where the deductions are less than or at 1.5 lakhs, new regime is preferred. And where the deductions are more than 3.7 lakhs per annum, old regime is preferred. And in between, like 1.5 lakhs to 3.75 lakhs, you have to calculate your taxes and take a call, which is beneficial for you. Now we know how tax calculations can be a little bit tricky. So to ease it for you, we have made a Bank Bazaar income tax calculator, which is free for all of you. You can input your details and understand that how or which regime will be beneficial for you. Here's a quick guide to how to use the Bank Bazaar's income tax calculator. Step number 1, select the assessment year. Step number 2, select your gender option. Step number 3, under income section, provide your gross annual income, income from other sources, annual income from interest, annual income from let out house property or annual interest paid on home loan which is self-occupied, and annual interest paid on home loan which is let out if applicable. Step number 4. Now, under deductions, provide details such as basic deductions like ATC, ATTTA, TTB, ATG, ATD, and interest on educational loan under ATE, and etc. if applicable. In the next step, enter your HRA details. Step number 6. Select either yes or no under whether you live in a metro city. Step number 7. Click on calculate. You will be able to view the income tax payable under both the old and new tax regime. Once you have entered all the necessary details, you will be able to see a table-like format where you can compare the tax liability between the old and the new tax regime. So to conclude, whether to select the old regime or the new regime, you should know the pros and cons of both the tax structures and take an informed decision. If you are stuck somewhere or you need help, you can always come to Bank Bazaar's free income tax calculator online and do the calculations and take a right decision for yourself. Thank you so much for watching.